oil prices are higher this morning, but not nearly as high as they had been overnight in the trading session, where we saw WTI actually get up close to $79 and Brent even above $80 a barrel. Joining us right now is Josh Young. He's Chief Investment Officer of Bison Interests, which focuses on oil and gas investments. And Josh, let's just talk about where we stand. If you look back at a WTI chart over the last month, we're up 20%. So we have seen pretty massive premium that's been built in from where we were just in recent history. But is the price that we're watching this morning reflective of what you had seen happen over the weekend in the Middle East?
Yeah, I mean, it's a great question. Honestly, I'm not sure it's even pricing in the current fundamentals. If you look at where oil inventories have gone in the last month and where they sit versus price, I think there's a good argument that you should see oil $5 to $10 a barrel higher, even without any of these geopolitical risks that we're seeing.
Explain that. What's happened to supply?
Yeah, so supply is just starting to roll over in the U.S., and we saw a surprise 11.5 million barrel decline in weekly oil inventories in the last weekly oil inventory report from the EIA. Came out on Wednesday. And so that's obviously just one weekly report, but we've seen a series of these reports where inventories have come in lower than expected. And so supply has been a little less robust than people expected, and demand has actually held in there pretty well. And again, this hasn't really been the story because people were so worried about tariffs and so worried after Liberation Day that oil prices fell a lot, but inventories fell too. And so we're actually in a pretty tight market at the moment. And so again, when you see these headlines, I think people sort of lose sight of just actually quite strong fundamentals.
The inventories are down because of the shut-in, the number of rigs that have been shut in. I mean, that's been pretty phenomenal to watch. I think that's a reaction from the oil industry to lower prices.
Yeah, it's what you should expect, right? Lower prices lead to lower supply, which eventually lead to higher prices. And because of shale, decline rates are so high that you saw a quick reaction, both from a supply perspective as well as from a supply activity perspective. So again, that's sort of what we were coming into this potential supply shock. And so over the weekend, we saw tankers. There was at least one that was showing up on various reports that actually turned around and headed away from the Strait of Hormuz. And so obviously it hasn't been from reports that we've seen any direct closure of the strait, but even a few tankers headed the other way could actually start to limit supply and could send prices much higher.
Josh, again, with the pretty impressive move we've seen over the last month that has built in a lot for this, why do you think the bigger gains that we saw in the overnight market have not followed through this morning? I mean, we just heard from Colonel Jack Jacobs that it's very unlikely that the Iranians would do something with the Strait of Hormuz. That seems to be the accepted wisdom from most military analysts on this front.
Yeah, honestly, I'm a little confused by that. I'm not a military expert, but it appears that the Iranian regime is in a corner, and it's possible that they pretend this away. But to the extent that they don't pretend this away, when they turn internet back on in country, they're going to have a lot of explaining to do to their people in terms of what they did in response to the U.S. bombing their nuclear facilities and in response to Israel bombing their important regime-related locations and bombing their missile capacity and so on. And so as you sort of force folks into a corner, especially folks with a more sort of radical ideological bent, they're more likely to take extreme actions. Their ability to launch attacks on the U.S. military and on Israel and so on seems to be getting reduced through Israel's phenomenal success from a military perspective. And so as they have a reduced capacity to engage in sort of conventional warfare, it seems increasingly likely that they would engage in economic warfare. And when people say close the strait, I don't think it's possible maybe for them to close it 100%, but if they started, or if through one of their terror proxies, they started to sink ships or attack ships, we saw when the Houthis did this, it didn't take very many attacks before shipping activity fell substantially. So I think you could see a substantial reduction in the traffic through Hormuz, which would effectively cause the shock that people were thinking. Why did the price fall? Well, Iran hasn't done much yet. So we'll see. What I just said is a theory, and we'll see if it plays out or not.